I can introduce shortly some of the loan programs that we do, but basically we do every type of loans that you can find in the commercial and business world. So we do commercial real estate, we do business loans, equipment loans, we do owner occupied, we do non-owner occupied like investor deals. Yeah, but on the commercial side. So everything that on the commercial and business side that we will do. I see a couple of questions popping up, so I can address those questions, and then we can move to more specific questions. So if you have any questions, just let me know. So number one on the list in the email, working capital. Yes, we do provide working capital. I don't know if you see the question number one. Our clients to buy goods from Vietnam supplier to import to the U.S. for sale online in the U.S. can get a loan of 50K to 100K for paying the suppliers in Vietnam. So basically, the borrower must be a U.S. entity with a tax ID here, and everything will be based on cash flow. We are a cash flow lender, also with collateral as a commercial bank. So the short answer is yes. Working capital done. Question number two, inventory. If a person has inventory 100K available in the warehouse already, can he use that inventory as collateral for commercial loan of 70% of that inventory? Yes. The short answer is yes. But we not only look at collateral, we look at cash flow. We are a cash flow lender. As long as the business cash flow is sufficient to pay back the debt service to the bank, yes. Question number three, buy an owner-occupied facility, get a loan about 400 to 500K for buying a warehouse to store products and goods that will be sold on the e-commerce website. Again, yes, we do finance the businesses to buy products and then sell. As long as the business is a U.S. entity with a tax ID, has tax returns for at least 2 years, similar to the residential mortgages. Yeah, so yes, again here, to buy owner-occupied facility. Question four, one-time construction loan. A client plans to buy a primary home, having a big yard, 6,000 square feet backyard, to build a warehouse, say 4,000 square feet on the land. The warehouse is a place for him to store goods that he can sell on Amazon. So the warehouse will be used for business of his company. For construction loans, yes, we do provide both residential construction loans and commercial construction loans. But the commercial construction loan is more complex and it requires a lot of documentation regarding the project because it's construction. It's more complicated. It will be another one-off. But the short answer is yes, we do provide that. Residential, we do provide residential construction loan, but for primary residence only. So you cannot build and then sell. We don't provide that financing. We provide financing for the owners to build their primary residence. That's for residential construction loan. Question five, equipment financing. A client plans to buy the required equipment and materials for a laundromat business, such as a commercial washer and dryer, chair desk, built to corn, blah, blah, blah. How a borrower can get a loan about 70K for buying the required equipment. For this loan amount of only 70K, we do provide that, but usually for equipment, we are looking at much larger. Same with commercial real estate, we're looking at much larger. So usually minimum for equipment is 500K, and for real estate, usually the underwriters here at the bank, they're looking at $1 million minimum. We can make some exceptions if we can make the case. I can go a little bit lower than that, but that's usually the starting point for commercial real estate. But we can go a little bit lower. It depends on the case, and we can discuss offline on a case-by-case basis. Question six, hot money loans for fix and flip. A client who does fix and flip, how can he get a loan for buying old houses and fix houses? Hot money, this is the bank, so the money here is from a commercial bank. So the financing rate or the interest rate will be lower than hot money. And if the client is credit worthy and the cash flow is good, definitely the bank can help financing for fix and flip. So I see only 6 questions here. So I can answer other questions or I can give you some of the programs we have at the bank.
Yes, may I ask a question?
Sure.
Yes, so I would like to know more about, do you offer anything for buying commercial property in order to open a restaurant?
Yes, we do. It's called owner-occupied commercial real estate.
Ooh,
So
that's
the
good.
owner will buy and then run and operate the restaurant. Yes.
So we can do that through you guys, right? Like we just need to create an application and what type of document would you need from the
Yes,
client?
there's a loan package for any type of loan. So I can just answer the general package that would include 2 years or 3 years tax returns depending on the loan amount. Any loan amount like a million or more, we usually require 3 years. Below a million, that will be 2 years. Tax returns of the business and the personal tax returns of the owner. And then there will be a few bank forms to fill out, like loan application, personal financial statements. For real
Okay,
estate, there will be another form for environmental, okay, questionnaire about the property, where it's located, the conditions of the property, yeah, the parcel number, yeah, basic information about the property.
perfect. Thank you very much. I have a client who is really interested, so hopefully I can work with you soon about this.
Thank you. And I think you have my contact through email, so feel free to email me or call me. Thank you
Thank,
for your question.
thank you very much.
Welcome.
Hi, Yang. Hi, this is Nicole. I have a question right down on the chat box. Can you please answer it?
Sorry, I just called in. I do not see the question.
Sure.
Can you?
Yeah, sure. So we would like to have overall process for commercial loans, like document to submit. So you already mentioned it. You can send us the list of all the other kind of loan for commercial. How about a turn time for approval, and how soon, on average, can we move the loan from submission to closing? And any important notes when processing commercial loan?
Yes, good question. Thank you, Nicole. So it varies from loan program to loan program. So can you be more specific? And then I can give you the turn time for and the
Let's
timeline for
say
each.
owner occupied for commercial.
Yeah, okay. Commercial real estate, owner occupied,
Mhm.
usually 60 days from start to finish. 60 days.
Oh,
That's when we
60.
have the complete package. Yeah, 60 days
Mhm.
from a complete package.
I see.
And usually we get all the information, we submit a package, and for the first 30 days, that will be for underwriting. After the
Mhm.
loans got approved from underwriter, then we will order appraisal, environmental for that property. Usually we just need the first, or we could call it phase one. But if that particular commercial property requires the second phase, like deeper environmental, study, then
Mhm.
we have to order the phase two for that property. Phase two is usually when we have some hazard, some like oil tanks in that area, that we will have to order the phase two. That will cost more money, but usually
Mm,
80% of the time we just need to do the environmental phase one only.
I
Just
see.
20% of the time when they have like gas stations or nearby or hazards that I can find in that particular area, then we have to order the phase two. But 80% just phase one. So the first 30 days is for application, underwriting, and then the next 30 days will be for appraisal, environmental,
Mm.
loan documentation, closing, and funding.
Do we have any guideline for like particular commercial loans? Like, do you have
Yes,
any? Mhm.
yes, we do. So let's say commercial, so we have owner occupied and investor real estate. So we have both. I can show you here. So we do retail, like
Mhm.
open a restaurant or a shop, industrial, like warehouses, office, like normal office, like long factory office, or medical office, we do. And we also provide hospitality, like hotels, multi-family, like family units, like 20 units, 40 units, 70 units, condo, and the others we will consider case by case, like storage,
Mhm.
gas station. These are like more limited and special purposes, or mixed. Sometimes we have mixed when we have retail on the ground floor and we have residential, upstairs. So that is mixed. So these
Mhm.
they have different kind of LTV, but normally that will range between 60 to 70% loan to value for investor for rental properties.
Mhm.
But for owner occupied, we go up to 80% conventional. For FBA, commercial real estate, for owner occupied, we can go up to 90% loan to value. So the highest will be FBA 504 program with 90% loan to value, 10% down for owner occupied. That's the highest. Then the next will be 80% loan to value for owner occupied commercial real estate.
Yeah,
And the
that's
lowest
great.
will be for investment, like investor
Mhm.
buying and then renting out. So that will
I see.
be up to 70% loan to value.
I see. Would you mind to send us the info like in a document after the meeting?
Sure, I can create something and share some internal only. I cannot share the full one, but I can share like basic information like loan to value, LTV for each type of property. Yes, I can do that.
Yeah, sure, please.
So, what state are you covering right now?
For commercial real estate, we cover nationwide. So I have teams doing in California only and outside of California. We have two groups. One is California only, and the other is outside of California.
So you do Florida, right?
Yes, Florida, you name it. Texas, Arizona. Yep,
Awesome. Thank you.
you're welcome. So another thing I would like to point out is it's similar to residential mortgage that you look at, DTI, debt to income ratio. On the commercial side, we flip it a little bit. We call it debt service coverage ratio. So we calculate the net operating income from the property and divide it by the debt service. So we usually look at the minimum of 1.25 times. So the cash flow must be at least 1.25 times of the debt service. That's just on average. So like retail might be a little bit more because of COVID. They require 1.3 times. But for normal office, industrial, 1.25.
Got it.
Yep. So like DTI, we look at in residential. So in the commercial real estate, we look at debt service coverage ratio. We usually call it DSC, debt service coverage ratio.
Guys, any other questions for Yang, please?
Hi Yan, this is An. Do you have any program for nursing, long-term care, or nursing home? And what is your current rate?
Nursing home, yes, we do have that. The rate, it varies. So we usually look at the benchmark rate, that is the U.S. Treasury yield, plus a loan margin. The margin usually between 2.5 and 3% on average. It depends on the cash flow, how strong the cash flow is, how strong the guarantor, which is the owner, how strong is their net worth, the liquidity, the LTV. They can look at how strong the deal is. And the stronger the deal, the loan margin.
So the minimum is 2.5 if I have a really well-qualified investor.
Yes, sometimes we can a little bit go lower than 2.5. It's like 2.25 for larger deals. They're like 5 minimum. Then we can negotiate to, lower the loan margin. But on average, between 2.5 and 3.
And how fast can you close? Is it still within 30 days or 60 days?
Yes, usually we try always for 60 days. Yeah.
What's
But SBA loans will take longer because we have to wait for the SBA agency from the government. So for SBA, I would say 3 months, 90 days. But for conventional commercial loans, that will be, 60 days since the day we receive all the documents.
If there's a request to close within 30 to 45 days, can you communicate that?
It's in the commercial world, it's very hard, and I try not to promise that. I try to deliver more than what I promise. So I just say 60, and if I can close within 45 days, and then that will be a wow factor for our clients. I rather not say, hey, we can do 45, and then, try to cram everything. And sometimes, it takes time to order appraisal, order environmental. Yeah.
It would be helpful if, following the meeting, you can send us the material, the loan programs that are available that you're offering.
Sure, definitely. I can share like SBA loans program. I can share commercial real estate program, owner occupied, and then investor. Yep.
Awesome.
Key one.
Thank you.
You're welcome.
Hi, Mr. Yan. Can you hear me?
Yep.
Hi, everybody. I would like to ask if you have any program for the startup business.
For startup, it's very tough. In theory, yes, they can apply for SBA loans because SBA has a small program for startups, but it requires a lot of work. And in my banking life, I have never seen any successful case, to be honest with you, because that will require the borrower to submit a business plan, then the 24-month detailed projection for revenue and expenses. Then you have to persuade them that, hey, I want to open like mobile shop, and then I will make this money. Usually the SBA, they allow you to apply, but I do not see a high success rate. So it's really tough for brand new businesses because they will require some cash flow. They want to see some historical, just like with residential mortgages, we want to see some history. So in theory, they can always apply, but the success rate, sorry, it's just a different story. Most of the time that I advise some of those clients who want to start a new business, just get a HELOC, home equity line of credit, get equity out of your property. Most of the properties in California or in the state have gone up a lot during the last few years. So they can get the equity out and then start their own business. That's way easier. And the HELOC, usually they have a promo rate for like 6 months or 9 months, and it's super low with a promo rate, and they can use that to fund their new business or their new adventure.
Hi, and Jan, can you give us, information about a commission? What if we have a customer and we refer the customer to you? So what the we get?
Okay, so number one is your client, not my client, the loan factory's client. So you have to discuss with them. I will tell you, hey, based on this deal, this is the loan fee. I can tell you my part. And then it's your client, so you have to tell them, and you can add your referral fee directly, and you discuss that with your client. I will have no control over that, and I cannot add it myself. I can just tell you, hey, based on this deal, based on this LTV, here's the loan fee. Usually for commercial real estate, we charge 1%. And if you charge 1 more percent, so the client will have to pay 2%, and you have to explain that to your client. I can give you the terms and conditions on my end, but I have no control, and I do not have the permission or the authority to discuss that with your client. So yeah, but I can give you, hey, this is 1%, so you can add 0.5% or 1%. It's up to you because it's your client. How much you want to charge them is up to you for the referral. And once the client agrees, you just send escrow, the title company, the demand letter with your signature, your client's signature on the letterhead of Loan Factory, and escrow officer will take care of that upon closing. They will distribute that commission to you.
Okay. Thank you very much.
Yeah, you're welcome. We work with a lot of loan brokers in commercial, and that's how we do that. And that their client, they charge, based on their negotiation with the client, they just send us the demand letter under their letterhead with their client's signature and their signature, send it to escrow. So I have no influence on that.
Normally, how much do you see that the broker charge their clients for the referral?
Oh, referral, it depends. Some big deals, some loan brokers, they charge 0.5% because big deals, like 5 million. So you see that? 0.5% of 5 million is huge as well. But some smaller deals, like just 1 million, they usually charge 1%. But it varies case by case, but that's what I see from the other brokers.
Is 1% commission, that's a standard for all of the bank for commercial?
No, I cannot say on behalf of all banks. I can just say from my experience working with the other loan brokers. Yeah, that's usually what I see. And some they charge more, some they charge less, depending on the type of property, the location, and how they negotiate with their client, and how the clients are willing to pay.
Mm-hmm.
Yeah. But for the bank, usually we charge 1% for the loan fee. Yeah.
Okay. And because so you think your price, your grade over there is better than the other bank, or what that's special about?
I cannot say that we are better. I don't know pricing of all banks, but this is very standard in the market, in the commercial world. Yeah. The 1% for commercial real estate is very standard. But for some bigger deals, we can lower that. Sometimes if the client is willing to deposit into the bank and then have more products with the bank, we can always negotiate, to bring it down. And I also have some authority on that as well. But it varies case by case.
Thank you.
What about the interest rate looking like for commercial loans?
For commercial real estate right now, let's say the 10-year treasury yield, usually 10 years treasury yield plus, let's say 2.5. So treasury yield today, the margin is usually between 2.5 and 3. Let's say 2.5 for a good customer. 10-year treasury today is 3.94. So 3.94 plus the loan margin of 2.5. So it's about 6.44.
Say that again. What is the 6.44? Is it?
For example, this is commercial real estate, and the 10-year treasury yield right now is 3.94 plus the loan margin of 2.5. So that equals 6.44% for regular commercial real estate, either a purchase or a refinance. About 6.44.
What did you say the margin was?
The margin is 2.5% over 10-year treasury yield.
Okay, and then you plus that with how much to get the 6 point something?
So it's a 10-year treasury yield, and today's the 10-year treasury yield is 3.94. That's
Mm-hmm.
the benchmark rate plus the loan margin. The loan margin, let's say on average, 2.5 in this case. So
Oh, okay.
3.94 plus 2.5 equals 6.44%.
Perfect. Thank you. That's really helpful information.
You're welcome.
So,
Do you
what type of business you think that's a high risk and you don't really like to work with?
Oh, because we are the bank, right? Banks are federally regulated, so we cannot get involved in any like marijuana, some like, firearms. Those are prohibited that we cannot. But generally speaking, we do with all types of businesses, but not those types. Yeah, marijuana, firearms, so those. Yeah. And for
So,
properties, we do generally, but some special purposes like storage, hotels, that'll be tougher deal and special purposes. But other properties, easy, like multifamily condos, apartments, medical office buildings, industrial warehouses, no problem. Yeah, retail, we do all day long.
okay, thank you. Because I know some bank they don't like to work with people like in the restaurant owner. I think opening restaurant is considered is a high risk. Is it right?
Yes, if it is for a new owner, but if it's like you have a successful restaurant and you want to open the second one, then it's a different story. It's from an experienced restaurant owner who would like to expand the business into a
Yeah.
new location. That's why they want to buy the property to open the second restaurant. So that's a different story, and that we do all the time.
Okay. No, I mean about new one. New
Yeah,
restaurant.
new one will be tough because it's hard to explain. If you have any experience, have you run a restaurant before? How can we know that you'll be successful? So that's the toughest question to answer. But we can mitigate on that with strong cash flow, strong, net worth from the owner and the business plan and what type of, food they are selling and what type of neighborhood it is, the location of it. If you're selling like Asian food in the Asian, population neighborhood, then it makes sense. So yeah, it depends.
do you do DSCR loans for residential investment properties? And if you do, what's the minimum ratio you go to? And then do you also do no DSCRs?
I'm sorry, I don't understand. What do you mean, DSCR?
Yeah, for residential investment properties, like just basing off the cash flow of the property, but it's a residential, not commercial.
Residential? Is that a mortgage? Residential mortgage? I think that falls under Loan Factory's territory.
Okay, yeah, because we have some non-QM lenders who do it, so I was just wondering if you offer.
Oh, no. For residential, we are not a strong residential. We're not in that. We focus more on commercial.
Okay.
Yeah, but my team, they do HELOCs as well. So for commercial, yeah.
Okay, thank you.
Welcome.
How fluctuate is the rate for commercial loan compared to retail?
Commercial loan compared to retail? I don't understand that. Sorry.
The rate
You mean-
for loans, like how fluctuate the rates are as compared to retail? Because retail right now, they can adjust.
You mean consumer? You mean consumer loans? Commercial loans versus?
Yes.
Oh, okay. Right now, for that example, so right now for commercial real estate, we do like 6.44% on average, like 6.44. I think it's fairly affordable in this market where we can see like 30-year maybe residential rate right now it's above 6 already. So this I think is very consistent with the residential mortgage rate. Yeah, I see that it's pretty much similar. It's above 6, and it might go up or go down. It depends on how we are dealing with the inflation. And the Fed might increase further if the inflation continues to maintain its peak. But if inflation goes down significantly, or 1 month to the next, then we can see some reduction in the rate.
Hi, and then do you guys also do like commercial lending for, let's say, apartment, like for multifamily commercial building, like apartment, maybe, a multifamily commercial project? Thank you.
You mean for brand new construction?
For new construction or for existing building, let's say, I need to, if my client want to buy, let's say, something above 4 units. So for us at Loan Factory, I cannot touch stuff above 4 unit. If it's an 8 unit, then it's considered to be commercial. So I would like to know
Yeah.
if I do a multifamily commercial property.
Yes. So there are two parts to your question. The first part is, okay, if it is an existing property with more than 4 units, definitely it falls under commercial. Up to 4 units, that's residential. So for existing properties, it will be under the multi-family type of properties. So 5 units, 6 units, and above, yes, we do finance that with refinance or purchase. That's a normal one. But for brand new construction, like you own the land already, but you have no property on the land and you want to build, like you want to build 4 units, 5 units, 6 units on that land, then it falls under construction, but commercial construction loan. We do provide commercial construction loan for that purpose. We do. But we will require the business plan, who will build, who is your contractor, did you buy the land already, who will be the sponsor, like the owner, and what is the pricing you want to build and then sell, what is the cash flow, what is your phase 1, phase 2, yeah. So that will require more information from the construction project.
So it sounds to me like you do offer construction loan. If it's a construction loan for, let's say, a builder who want to take on maybe 10 units or whatnot, then that fall under commercial loan.
Commercial construction loan, yes.
Hey, for existing building, what is the typical down payment or the average down payment that you require for us to put in a deal? Is it like 30%, 50%? What is your bank criteria for existing building financing?
For existing, if it is for owner occupied, for commercial and conventional loans, we provide up to 80% loan to value. 80% for owner occupied. Investment or investors deal, like you buy and you rent out. You do not run. You do not occupy the property.
Okay.
Then the LTV will be up to 70%. So down payment will need to be at least 30%.
Is the rate about the same for, own occupy, or, it be a little bit different for investor versus like farmer?
Usually the rate is pretty much the same because it falls under commercial real estate.
Okay.
But for owner occupied, sometimes they have some discount because it's from the owner and they will, bank with the bank where they borrow the loan, and they usually say, hey, if we do this deal, we will make the deposit, we open the account, and because of that, the bank will give them a little bit lower rate for the relationship discount that the business will bring to the bank. Usually about 1/8 or 1/4 to the loan margin. So 0.125 or 0.25% lower compared with the investor deal.
So it's depend on how much asset under management that you guys have with the client. So if people want lower rate, then they need to have that discussion with your banker to bring some of the assets moving forward.
Yes, sometimes that's the rate, and we say, hey, but they say, hey, we have like 2 million with the other bank we can transfer. Can you lower the rate? Usually I receive that a lot, and I say, yeah, I can make the case because you bring more business to the bank, and we can go to the underwriter and credit administrator and say, hey, this is the loan, but beside the loan, we have this deposit, we have this new relationship with this new deposit from this new client. Maybe we can go a little bit lower than, the average. Yep, that's what we call relationship pricing. Yes.
Hey, final question, and then for multifamily commercial, how is it possible? The people have investor only, or is that like, if the manage or live in the building, can they get the family? Or this is like only for business that they occupy only? Because
multifamily, they will have more units. For commercial, at least 5 units to be classified as commercial. So just imagine at least 5 units, or let's say 8 units. And then the owner lives in there, but he occupies only 1 of the 8. So the 7 other units are rented out with tenants. So that will be classified as an investment because he occupies only 1/8 of the property, meaning only 12.5% of the space. And he leased out or he rented out, you see that? He rented out like 87.5% of the space. So it's considered investment property, not a commercial owner occupied property.
Okay, so that would be an opposed to, let's say, a doctor who owns the clinic and she want to purchase the clinic, then that would be owner occupied because she occupied.
Yes, the definition of occupancy is at least 51% of the space. If you buy the property and you occupy and run or occupy the space of at least 51% of the total square footage, then it's considered owner occupied. You lease out up to 49%, so it's still considered owner occupied. But you occupy less than 51%, then it's considered investment property.
Thank you, and then.
Yeah, you're very welcome.
Hi, Danh. Can you let us know what is the minimum and maximum loan amount that you can offer? I know that it differs on loan type. What is it in general?
Yeah, in general, for commercial real estate, we look at like 1 million minimum, but sometimes we go lower, like 800, 900. It depends on the deal, but minimum usually a million. That's the minimum. For maximum, we don't have any maximum. We can go up to 15 million as well. That's our
Thank you.
that's the range.
For the minimum loan amount, is it applied for business line of credit as well?
Business line of credit for working capital or inventory financing, we can go a little bit lower, but usually minimum is 500,000, 500K.
Yeah. Okay. Yeah. Thank you.
Yeah, you're welcome.
Hi, Danh. I think we
Yeah.
don't have any more questions for now. So
Oh, okay, sure. If you have no more questions and you have my contact information through email already, so feel free to reach out to me by email or give me a call or let me know if you have any further questions. And I will email Thảo and then Anton a brief information about some of the loan programs we have at the bank.
sure. Thank you so much.
Yeah, thank you, Anh.
Yeah, you're very welcome. Thank you
you.
everyone again
Thank
for allowing me
Thank
to
you.
talk. Thank you.
Thank you for
Appreciate
your
it.
time.
Thanks, everyone.
Thank you so much, Anh.
You're very welcome. Thank you, everyone. Appreciate it.